Ladies and gentlemen, once again, thank you for listening to me, dear and fellow investors. We are continuing to answer Asha Kijana's questions. Where and how do we get or do we access long-term investment vehicles in a risk-free, or if you like, a low-risk manner? May not be risk-free, but at least a low-risk manner. We've discussed unit trusts or mutual funds. We've looked at SACCOs as an avenue for investment. Today, ladies and gentlemen, I would like to talk to you about, again, a very familiar avenue for investment, and that is property. Real estate, basically housing, but for purposes of investment. I'm not talking about housing as a facility where your family stays or where you sleep. I'm not talking about that. I'm talking about real estate as an investment, in particular as a long-term investment asset, okay? And a low-risk one for that matter. That's what I'm talking about. I'm not, I won't be able, obviously, to go into detail. I'm not a real estate expert. I'm a financial advisor. So for details about real estate investment, please consult your real estate broker, your real estate expert in your particular country or jurisdiction. All right, but you're always welcome to ask me any further questions about real estate. Okay? Now, there are several types of real estate. All right? Maybe even before I get there, just to re-emphasize, real estate is a very good and important opportunity for making a long-term investment. It has issues like others, which we shall talk about, but it's a good one. Now, there are several types or categories of real estate, which again you can discuss with your real estate advisor, your real estate broker in your particular countries. But they could include residential real estate, they could include office real estate, industrial real estate, or commercial real estate. You could even, that is if you decide to invest directly, meaning you develop an office complex, or you buy an industrial real estate or a residential real estate asset. But you could even invest indirectly through, for example, what we call real estate investment trusts, which are listed, in this case, in our region, in the Nairobi Securities Exchange. You can always buy REITs or real estate investment trust units through the stock exchange or the securities exchange in Nairobi if you prefer to invest indirectly. But all those are opportunities for you to invest for the long term in real estate. Now, why do I say you invest for the long term in real estate? Many people think of real estate as a source of income, periodic income, through rentals. That's great. You do get rentals if it is in a good location and the economy is good and that kind of thing. Yes, you do. And of course, if you have a tenant, of course you do get rentals, and that would be a good and important source of income. But the most value that you get from your real estate investments come in the long term, not just in the long term, but they come when you sell. Okay, when you sell your asset, that actually is when and where you get the most value for your real estate. If you calculate the return that you get just from your rentals, this is what we call rental yield, you will often find that it is not much to talk about. It's not so high. You would be lucky if it is equal to or higher than what your fixed deposit would pay you in a bank, for example. It is certainly not going to be anywhere near to the yield you'll get from a bond, for example. Okay? So, as important as rentals are, that is not the ultimate source of value that, from an investment perspective, that you'll get from your real estate investment. You should be looking at the long-term sale value as your source of return from your real estate. And what does that mean? That means you should be emphasizing issues like the management of your asset, whether it is a residential asset, office management, making sure that the value is not only preserved but also enhanced. It makes sure that it's properly maintained, and because ultimately when you sell it, you want to sell it at a good price and get as much return as you can from your real estate. So I need you to keep that in your mind. And like I said, most people mistakenly think that the investment value that you get from real estate is from your rentals. No. Rentals are important, but it is the ultimate sale value that will give you most of your returns from a real estate investment. Okay? Rentals, however, as we said, are very, very important as a source of income. But rentals can also be important for another reason. They give you income which you can reinvest. Okay? And remember we talked about compounding. If you want to maximize your return from an investment from a long-term growth perspective, there's no better way to do it than by compounding. And remember I told you that you can compound also by yourself, by reinvesting your income. So, if you have a real estate asset, right, which is giving you rentals, and assuming that you have a separate source of income, you don't need that income urgently, then the best thing to do in order to improve on the potential for long-term growth of your capital would be to reinvest that rental. Okay? And the one good way to do that, again, is something that we've already discussed. You can open up or you can set up a unit trust account separately and then channel all your rentals, or most of it anyway, to your unit trust account. Remember, the unit trust account is very flexible. You can top up anytime. So anytime you're paid by your tenants, you basically deposit the money in your unit trust account. And that would be a fantastic way, A, of reinvesting and thereby compounding, but B, of making sure that you maximize on the long-term growth value of your investment, in this case, real estate. Right? So, briefly for today, that is what I want to tell you about property as a long-term investment. As I said, for details which will vary from jurisdiction to jurisdiction, country to country, talk to your real estate experts, talk to your real estate brokers, but by all means do ask me any question that you might want for further clarity in terms of real estate or property. Again, as I wind up this one, So you can invest in real estate directly, and it could be residential, office, industrial, or commercial. But you could also invest indirectly through a REIT, real estate investment trust. And you buy them from the securities exchange, and they basically will declare dividends every year coming from the rental income of the properties under that REIT. But also their value could go up and down just like any asset in the securities exchange. Thank you very much for listening. Do remember to subscribe so that you keep getting notification for further videos. Thank you.